Welcome to Wealth Wednesday. Today we're joined by Yvonne Delry, personal finance planner and investment specialist from First Ontario Credit Union and Aviso Wealth, to provide investment advice in the face of market volatility. Good morning.
Good morning.
Market volatility, it's a scary phrase.
Well, I think that it is a natural and unavoidable part of investing. Especially when you're going into stocks and bonds. Volatility is what we experience when the markets have their ups and downs, and it is the measure of risk when we're investing in, in the markets.
Yeah.
So although it can be uncomfortable, it's also a natural part, and it can provide some long-term growth potential.
So this can be a stressful time, an emotional time for investors at all stages of life and investment, possibilities. How should we manage this?
Yes, so there are some pitfalls that we want to avoid.
Okay.
So investing can, people always have that fear of losing money. But when you start to readjust your long-term goals, that's when you can sometimes run into some issues. So emotional decisioning. So if you readjust your goals and you sell because markets are low, then you're locking in the losses instead of maybe waiting for the rebound.
Yeah.
Herd mentality. So this is where we start to think and act the way the people are around us. So in investing, it is maybe selling when markets are low, or through euphoria, buying when markets are high. Market timing. So some people try to think that they can market time, sell when the markets are high, get back in when the markets are lower. But this means you have to double guess. You have to time when markets are high and get out or get back in when the markets are back low.
Yeah.
This may create some short-term gains, but over the long term, history shows that just riding out the markets, the highs and the lows, produces long-term growth.
Yeah, trying to predict the highs and lows, it's impossible, right?
It's very difficult, and just losing a few good days in the markets can really affect long term, right? So a few strategies to implement. So first of all, we talked about this so much, know your budget. Know what your inflows and your expenses are, and have a emergency cash reserve so you don't need to maybe sell investments when they are at their low point. You can dip into your cash savings. Diversify your investments across many different investment options so you're not just relying on one to produce well.
Right.
Work with a financial advisor, because they can tune out some of the noise for you and keep you on track, right? So even though investing can be uncomfortable, long-term growth is there through the markets.
You got less than a minute. Do you find that sometimes, and especially like these times, you're playing part-time psychiatrist or psychologist to say, you're going to be okay, there's ups and downs, don't freak out? Yeah,
so I think that just also understanding that bull markets historically, so bull markets are when markets have increased over the last 66 years. Bull markets have a longer time frame, and the percentage of growth is higher than bear markets, which is when markets are low, right? So just understanding to keep on track, work with your financial advisor, work through the highs and lows, and just keep your eye on the prize.
Great advice,
Dream,
Yvonne.
plan, achieve.
Thank you so much for joining us this morning.
Thank you.
All right, all the links on our website, chch.com/morninglive. Good morning.